Hi and welcome. In this session, I will discuss a multiple choice questions on bonds payable. The difference between the periodic interest cost calculated using the interest method and the nominal interest on the bonds payable is what? You have four answer options. So the question is asking, what is the difference between periodic interest cost and nominal interest? Now, what is periodic interest cost? This is effective interest rate multiplied by amount of bonds payable outstanding. This is what you recognize as an expense. This is your periodic interest cost. And then you have nominal interest. This is coupon interest rate. That is interest rate stated on the bonds. This is the interest that the company pays to the bondholders. So coupon interest rate multiplied by face amount of bonds payable. So this nominal interest is what interest is paid to the bondholders. Periodic interest cost is the amount that is recognized as an expense. This amount is paid. This is interest paid, and this amount is interest expense. Now, what is the difference between these two? The difference between these two may be discount amortized or premium amortized, depending upon whether the bonds were issued at a premium or whether the bonds were issued at a discount. It depends. But certainly, the difference between periodic interest cost and nominal interest represents amount amortized. This amount amortized may be premium amortized or discount amortized. The difference between periodic interest cost and nominal interest cost is not amount of discount. It is not amount of premium. It is not amount of loss. But it is either premium amortized or discount amortized. So the answer in this case is C. The difference between periodic interest cost and nominal interest represents the amount amortized. And this amount amortized may be amount of discount amortized or amount of premium amortized. All right, students, I hope this is helpful. We'll connect again. Goodbye.